If you've missed a mortgage payment, or two or three, and you're starting to get letters from your bank, I need you to watch this video all the way through. Because what I'm about to tell you could save your credit, protect whatever equity you have left in your home, and give you a real path forward. I'm Anne-Marie Bortz, a broker associate with the Kai's Company, and I've been doing this for over 25 years. I've helped homeowners through situations just like yours, especially after the 2008 crash, when short sales were my specialty. This video is not a sales pitch. It's what your agent or your bank probably won't tell you. Let's start with the facts, because they matter. As of May 2026, Florida now leads the entire nation in foreclosure filings. Not third, not second. Number one. According to reporting from Insurance Business Magazine and Adam Data Solutions, Florida had the highest foreclosure rate of any state in the country in 2025, with filings on nearly 0.5% of all residential properties. And the trend has only accelerated. In 2026, 1 in every 750 Florida housing units already has a foreclosure filing, and filings nationwide are up 26% year over year. But here's what makes Florida's situation uniquely painful, and why I wanted to make this video right now. It's not just the economy, it's not just interest rates. A huge part of what's driving Florida homeowners into foreclosure is the insurance crisis. The average Florida homeowner is now paying over $8,000 a year in property insurance. That's an 18% increase in a single year, and roughly 40% more than just 4 years ago in Central Florida. When your insurance bill goes up by hundreds of dollars a month on top of your mortgage, taxes, and everything else, families break. Good people, responsible people, fall behind. Not because they were careless, because the math stopped working. Here in North Central Florida, in Marion, Citrus, and Levy counties, I'm seeing it firsthand. And nobody is telling these homeowners the truth about what they can still do. So I will. When you miss a mortgage payment, you enter what's called pre-foreclosure. In Florida, your lender can't take your home overnight. There's a legal process, and that process takes time. That time is your window of opportunity. After you miss payments, the lender sends a notice of default. Then, if nothing changes, they file a lis pendens. That's a public notice that foreclosure proceedings have begun. From there, a Florida foreclosure can take anywhere from several months to over a year to fully complete in court. That time, that window, is when you still have options. Once a judge signs the final judgment and the auction hammer falls, your options disappear. And that's why I'm making this video today, not after, before. Here's a question nobody is asking you. Do you actually have equity in this home? If you bought your home 5, 7, 10 years ago, even with some missed payments and arrears, you may still have significant equity built up. Florida home values have appreciated considerably over the last decade, and even with recent softening in some markets, many homeowners in our area have more value in their home than they realize. Let's say your home is worth $280,000 today. You owe $210,000 on your mortgage plus $12,000 in arrears. After paying all of that off at closing, including selling costs, you might still walk away with $40,000 or more. That is your money. That is your future. And if you let the foreclosure complete, the bank takes the home, sells it, keeps what they're owed, and you may walk away with nothing. So before you assume you're underwater, before you assume there's nothing left, call me. Let's run the numbers together. Because I've seen homeowners shocked by what they actually had. Now, what if the numbers don't work out that way? What if your home is worth less than you owe? That's where a short sale comes in. A short sale is when your lender agrees to let you sell the home for less than what's owed on the mortgage and forgives the difference. It's not automatic, but I've negotiated dozens of them, and they work. Here's what makes a short sale worth pursuing. Number one, your real estate commission is paid by the bank. That's right. In a short sale, you do not pay the agent out of pocket. The lender covers it as part of the negotiated settlement. So there's no financial barrier to getting professional help. Number two, You negotiate the deficiency. In most short sale negotiations, the lender agrees to forgive the remaining balance and not pursue you for the difference. That deficiency waiver needs to be in writing, and a good agent knows how to get it. Number 3, you control the timeline. Rather than having a sheriff's sale date forced on you, you work with a buyer on an agreed closing date. You can plan your move, you can find a rental, you have dignity in the process. Number 4, your credit takes a hit, but it's survivable. A foreclosure will typically drop your credit score by 150 to 300 points and stay on your credit report for 7 years. Many lenders won't touch you for a conventional mortgage for up to 7 years after a foreclosure. A short sale, the credit impact is real, but it's typically 100 to 150 points, and FHA guidelines currently allow you to qualify for a new mortgage in as little as 3 years, sometimes sooner under certain hardship programs. Let me say that again. Foreclosure, up to 7 years locked out. Short sale, potentially back in the market in 3. If your goal is to rebuild, own a home again, and get your financial life back, the path matters, and the short sale path is significantly shorter. Now let's talk about something most agents don't bring up: taxes. When a lender forgives debt in a short sale, the IRS has historically treated that forgiven amount as taxable income. If your lender writes off $50,000, they send you a Form 1099-C. Here's the critical update for 2026. The Mortgage Forgiveness Debt Relief Act expired on January 1st. However, if your short sale debt was forgiven in 2025 or earlier, you may still qualify. And if you entered a written agreement before January 1st, 2026, it may still be covered. I am not a CPA, so it is imperative that you consult with a licensed CPA for advice. I want to be straight with you. The tax landscape right now is in flux. Congress has introduced new legislation, House Bill 917, but it hasn't passed yet. What that means is you need to talk to a qualified tax professional or CPA. There are still ways you may qualify for protection, including the insolvency exemption. I can connect you with professionals in our area who handle exactly this situation. This is not a reason to avoid a short sale. It's a reason to go in with your eyes open and the right team around you. Let's talk about what comes next, because there is a next. If you do have equity and you sell before foreclosure, that money is yours at closing. Use it for your move, your emergency fund, or a future down payment. After a short sale, you rent, you breathe, you stabilize, and in 2 to 3 years, with some discipline and the right guidance, you can be a homeowner again. I've watched clients go from the worst moment of their financial lives to buying a home 3 years later. It's not the end, it's a reset. If you're watching this video, something in your situation brought you here. Call me right now. Before you do anything else, before you ignore another notice, just have a conversation with me. There's no cost, there's no obligation, and I will tell you the truth. My name is Anne-Marie Bortz with the Kai's Company, serving Marion, Citrus, and Levy counties. I also serve the greater Gainesville area. Call me directly at 352-405-1663. Your home, your vision, my mission. I'm here to help you and your family when you're ready.